What next for that rural services business that's trying to sell off?
That's right, came out of a trading halt today and the shares are down over 14%. Now, Ruralco, we weren't sure last week who had been the major bidder, but I think suspicions were it was Ruralco for Elders Rural Services business, and basically Elders board has rejected the offer that they've received from Ruralco as it's too low. I don't think it's all that surprising to have seen Ruralco, the major bidder here. We've already recently seen the ACCC clear the pathway for Ruralco to buy Elders Rural Services business. And really, at the moment, they're looking to divest all their assets, pay down debt, Elders. They've also secured talks with one of the three parties for their Futurist business, the automotive parts business, and they're looking to complete that sale process pretty soon as well. So, I mean, if you look at the rural service business, I think there was a bit of interest from several parties. It would make sense for Ruralco to look at the rural services business if they're both agribusiness retailers, both in that chemicals, fertilisers, livestock and animal products type business. And if you look at Ruralco's strategy at the moment, they're looking to expand their product offering, they're looking to expand their geographical footprint in their stores and really expand that retail business that they have at the moment, and the Elders business would provide them leverage to be able to do this. And also it's estimated that Ruralco could pick up anywhere between $20 and $30 million in synergies if they bought up this Elders Rural Services business. So they do look like the main party likely to take it out, but as I think there are probably some other parties that would be interested. But the market reaction hasn't been particularly good today. You know, Elders have come out of that trading halt. The shares have dropped around 14% or so. I think just within this agri sort of business at the moment, this sector, all the players have been facing the same sort of seasonal headwinds with lower stock prices and confidence just down in general in that sector. But looking at Ruralco, for example, looks like one of the better players within the space. Can probably see an earnings recovery once these seasonal and short-term headwinds sort of die down a little bit. And I think it would be a good move for it to look at this Elders Rural Services business mainly through that expansion of its store offerings and retail businesses.
Tim, there is one sector that is in positive territory today and doing very well, up about 1.5%. That is the A-REITs. Why?
That's right. It's the only sector making gains on the market today, up around 1%. I'm a little bit cautious on the REIT sector at the moment. I think probably over the longer run they've been a bit overbought. They've just had a bit of a correction with the broader market. They corrected around 12%, which was much needed, I think, but they're still up almost 50% since the rally in this property sector started sort of mid-2011. And what the property sector is really benefiting from and has benefited from lower bond yields, lower interest rates, and really investors looking for that dividend yield in the market. Now, these lower rates sort of push valuations higher, but now what we're seeing is we're starting to see some of these, like the US bond yields, for example, starting to rise, which probably won't be good for the property sector in the longer run. I mean, the property sector suffered the worst during the GFC. It looked very, very shaky. It was well overgeared, way too much debt. I mean, it has improved somewhat, and that's certainly helped the sector rally quite strongly since the GFC. They have diversified their risks somewhat and reduced their gearing levels, but I think the sector still looks overbought, particularly within those players that are leveraged towards the discretionary retail space. Your WRT, Westfield Retail Trust, you know, CFS, GPT. You know, the fundamentals within the retailing space at the moment hasn't been particularly good, and I think a clear sign of this was within WRT, Westfield Retail Trust, when the Lowy family sold out their entire $600 million odd stake out of the retail trust. So I think this is a clear sign that this is probably a sector within the property sector which is going to continue to struggle a little bit.
Just in terms of the overall market performance, what do you put it down to? I mean, was it disappointment over the RBA that's pushed us further into the red, or what's going on in Asia, just caution ahead of the Fed?
Yeah, probably a bit of all of the above. I mean, it's a bit disappointing, the market performance today, given that we had some good momentum yesterday through the market, which saw quite a remarkable turnaround. And despite positive leads from the US overnight, we weren't able to carry that through. But if you just have a look at an intraday chart of the Aussie market today, like behind me here, you can see here around 11:30 is when the serious weakness within the market really came about. And that was after the release of the Reserve Bank minute meetings. And if we look at what's weighing on the market in particular, it's again the yield plays. The big four banks are all down today. You know, Telstra's lower, the staples are lower, though these have had a pretty good bounce over the past 3 days. If we look at the big four banks, NAB's bounced back around 6% in 3 days, ANZ's up around 7%, so they've sort of bounced off those lower levels that we saw after quite a strong sell-off. But I think you're right, around the region there's certainly some caution. It's pretty mixed. We've got China and Japan and Hong Kong markets all lower today. I think there's some concerns sort of starting to rise more significantly now within the Chinese market. We've seen some reports from the likes of Fitch Ratings agency who said that, you know, the shadow banking system, the amount of credit and the scale of credit there is becoming extreme. So I think certainly there's caution around the region given the mixed markets, and I think it will be because of this FOMC meeting that's starting tonight in the US.